South Africa's JSE hosted the heads of SADC and other sub-Saharan stock exchanges for a two-day-long conference. Delegates were discussing ways to work together to facilitate the inflows of foreign investment funds into Africa. John Mandy, Chief Executive Officer of the Namibian Stock Exchange, was amongst them.
Well, yesterday we had a very exciting listing, and that was Eco Atlantic, the oil company, gas and oil company, and the first explorer in our offshore gas fields or oil fields, we hope. And that could be the lead in, because we believe that there are probably 18 of these companies out there exploring for gas and oil off our shore. So dual listings have been our mainstay, and we hope to continue on the same basis. So that was an exciting piece of news yesterday, and we had a very good turnout of the business community and government yesterday at the listing of Eco Atlantic.
So are we going to see other oil and gas exploration companies listing perhaps on the exchange this year?
Well, we hope that the first one, you know, you always start a journey with the first step, so this might be the journey to many more of them. But regulation, as you alluded to, have hampered or have started the stock exchange and are now starting to hamper them. We need to get more listings on the Namibian Stock Exchange, and we've got to try and encourage them. And discussions with the Bank of Namibia, who regulates the banks in Namibia, sort of indicating that the banks should list as soon as possible, and we've got 3 commercial banks. So maybe we get 3 listings in the next 18 months from the banks. Other incentives, we've got to try and get something going that we can make it attractive to list on the stock exchange. Otherwise, you're just another company with increased costs.
Of course, we were just talking to Nikki Newton-King, so let's focus in on Africa and the cooperation amongst SADC stock exchanges. What are you hoping is achieved at this quarterly meeting? What's on your agenda, and you're hoping that you can make progress on for the sake of growing activity across the continent?
Well, like Nikki said to you, DR's depository receipts, probably the way to go to get other companies to list on our stock exchanges, and it's something that we could do immediately, and where we're going. And particularly we're interested in talking to Straight, the CSD in South Africa, and we've asked our regulator if we have to have an in-house system, or can we use Straight as an outsourced item like we've used the JSE. We've been using the JSE systems for the last decade or more, and it's been very beneficial to us. It kept our IT costs down, and we have a big brother that we can always turn to when we need something. So we have a very good relationship with the JSE. We had it under Russell, and now we hope to continue it under Nikki's regime.
In terms of that technology that's needed, how costly is it going to be for the exchange? Do you have a figure there?
We pay operating costs, not development costs. So we don't know what the final cost will be of the new system, but we will pay operational costs, the same as a stockbroker would in South Africa.
Yeah, so really leveraging off the exchange's technology. Let's look at those DRs that you talked about, because we know that Zambia had a ZDR listed last year from First Quantum. Are you currently in talks with any companies? What is the response from companies with regards to going this route in terms of getting exposure in Africa?
Well, we've approved the listing of B2 Gold, which is a gold producing company rather than a gold exploration company, which we had previously. And they are interested in the DR. It depends on the costing and what their plans are. We approved their listing a few months ago, and we're now waiting for them to come to the market. Hopefully that will be the first DR we have in Namibia.
As you say, B2 Gold there. Let's talk about alternative product on the exchange. What's on the lineup for 2012 and beyond?
We don't have many plans, because we're still working under the 1985 Stock Exchange Control Act. We haven't got to the new generation or the 21st century generation legislation. And as soon as that comes into place, we'll have a better range of products that we can list. At the moment, we're limited in what we can list. Yeah. Due to legislation.
Still at the quarterly meeting of African stock exchanges, Samantha Loring spoke to Peter Mwangi, Chief Executive Officer of the Nairobi Stock Exchange, about the capital markets in the SADC region.
I think the Kenya Airways rights issue is a landmark transaction. We as an exchange have had a good relationship with Kenya Airways since the privatization and listing in the 90s. and it recruited a lot of new investors into the market and helps us to develop that all-important equity culture. This transaction is big, and we are hopeful that investors will be persuaded by the very convincing equity story that Kenya Airways has. They have a very good track record, and they have very sound business plan going forward.
Let's talk about the issue of regional cohesion and cooperation amongst African exchanges, because the JSE recently cancelled the Africa board. It didn't work. What are you seeing as an opportunity for how we can go forward from here and how we can enhance trade amongst African bourses and increase cooperation? What is the next step?
I think countries take pride in having exchanges, and that's only natural. It's part of the patriotic feeling of a country. So for me, the model going forward would be for us to develop strong institutions within countries and then seek to link them, to integrate them using technology and other means so that we have one pool of liquidity, but you also satisfy that need for a national champion, if you like.
So what is your focus in Nairobi? What are you doing in order to improve the domestic exchange?
Well, we've done a couple of things. The most important step we've made, I think, is the demutualization of the exchange, which is now substantially complete. We have a new company limited by shares. We have shareholders. We have a new charter and so on, and we have a new board now for the last 1 month. So the remaining step is for us to seek a self-listing on the NSE, which should happen sometime in the course of next year, which should improve governance in our market.
What portion of the NSE is going to be listed then? And as you say, next year, because I saw reports of it being in 2014, so that's clearly being brought forward.
Well, we would like to do it sooner rather than later, and to seek to list anywhere between 30 and 50% being offered to new shareholders. But of course, the entire equity of the company will be listed.
In terms of the market cap that you've got right now and your targets, you're sitting with a market cap of just over $10 million. Do you have a target like Nigeria has in terms of how you'd like to grow the exchange?
Yes, we do. We would like to grow our market, not just in terms of market capitalization, which is currently 10 billion, just over $10 billion. We would like to increase that to about 50% of GDP. But we also have targets for the number of listings. We want to increase the number of listed companies from the current just under 60 to somewhere near 100.
So what is the time frame for doing that? Because we saw listings coming to the market last year and the share prices haven't performed as well as one would have hoped. So how do you attract companies to list on the exchange in light of the fact that so far the listings have underperformed?
Well, I think the performance in the aftermarket was impacted by the bear market overall. But having said that, we currently have 2 companies that are seeking to list this quarter, and perhaps another 2 before the end of the year. And as the market improves, which is really our outlook for the balance of this year and going into next year, the case for listing will become more and more compelling.
That was Peter Mwangi, Chief Executive Officer of the Nairobi Stock Exchange, talking to us about capital markets in the SADC region. At the annual Capital Markets Conference held in Lagos, Nigeria this week, stakeholders challenged the management of the Nigerian Stock Exchange to strengthen their focus on bringing in domestic capital into its markets. Uche Okoronko spoke to Ade Bajomo, Executive Director of IT and Market Operations at the Nigerian Stock Exchange, about raising investment inflows.
Our role there is to offer, if you like, the building blocks for products to actually be built for the informal sector. We strongly believe, there is a huge potential in leveraging the population within the country. If you look at 15 to 64-year-olds, you have about 85 million people in that bracket. There's quite a number of schemes where with very little innovation and creativity, we believe the wider market can actually generate new products, collective investment schemes, which will tap into that sector big time.
Several stakeholders have said that the NSE should focus less on introducing new products and more on creating depth in the market. What is your take on these opinions?
We have to do both. Our market is been at a standstill, in our opinion, for quite too long in terms of product depth. And in terms of reach. Let me give you a simple example. If you take our equities market, which is perhaps the really viable market, the kind of trading techniques that we use are still, quite frankly, very basic. We need to go beyond that. We need to start, recently we introduced strategies such as good till cancel, and we will be introducing limit orders. Those are still very basic. We need to go beyond that. We need to deepen our products. We never had ETFs. ETFs are faster growing product class. We have to have those. We've had a first one, and we have a pipeline of those. We need to go into derivatives as well, financial futures and options. But with all this being said, we recognize the need to build capacity in the market as well. So it's really, for us, it's not a question of whether to do one or the other. The question is that we have to do it, but we have to build the capacity, carry people along with us, and make sure that when those products are introduced, people understand them and can trade them profitably.
A lot of the brokers have come out saying that introducing new technology is good, but the reality is that technology on ground is underutilized already. So why launch new technology? Now, what is the NSE doing to improve capacity? And more specifically, you mentioned a minimum technology standard that would be introduced.
The technology on the ground is okay for what we do today. But what we do today, we know, is not okay for what we need to do tomorrow and where we want to go as a market tomorrow. If we're really going to transform our market by changing the customer experience of doing business in the Nigerian market, then technology has a part to play. We have to be able to offer people who want to transact in our market a seamless manner in terms of order execution. So they need to be able to place their order, execute it, and manage their portfolios in near real time. And that's the kind of technology capability that we are talking about bringing in. So we will be hoping to publish the minimum technology standard requirement in the next few weeks, because it's very important to take the market with us along. So that gives our broker-dealer and wider stakeholder community time to review this and start making plans. Our new trading system is expected to come online within 12 months. And once that's online, we just want people to now start coming on the journey with us. We can't do it from 0 to 100 overnight, but it's one where we want to take people with us, because significant investment, capacity building is required to get the market, not just the exchange, but the entire market to where it should be from a technology perspective.
Well, that's all for this edition of Africa This Week.